Okay, in today's video, I'm just going to go over one of the trade setups that was requested. This was in Monday's session, and it was in STZ on the daily chart. Now, what I found about this one was that, well, I like the fact that price was above the 200 simple moving average, which was, because we were looking at the buy side of this one. Not crazy about the fact that we are back below the 50 though, and that the 5 and 13 are not on our side. However, this is still a setup. It might not be the highest probability setup, but it's a good setup. Why? Because we have the confluence of 1, 2, 3, 4, 5, 6. Looks like 6 price relationships that come in between this 216.38 to 218.49 area. It includes some price extensions, those ones in green there, of prior swings. It also includes 618 retracement of another swing. I'm not sure if it was this one, might have been, and we also had similarity when looking at prior swings. Those are the red lines that I have, so that would be where I'm comparing, maybe some of these prior high to low swings to the most recent high to low swing, and that projection actually comes a little bit lower. Bottom line, we had, what, 6, 7 price relationships, and price held above this area, and there have been buy triggers. Okay, so buy trigger is just essentially the price action that tells you that it's worth placing a bet, and here, what we wanted to see was both a moving average crossover to the upside and also taking out a prior swing high, showing the shift in pattern, saying that, it's worth placing a bet against that support. Now, what you can do, most of the people in the trading rooms that I'm in will trade options. So, you can look at a call spread if you want. If you don't want to risk a ridiculous amount of money, something like 225, 235. Some people will take outright calls, but those who know options a little bit better might not. You might look at something like a credit spread or something like that to express it without a ridiculous amount of risk. But bottom line, if this support continues to hold up, then the potential upside target is the 1272 extension of the swing into the zone. So that means this is the potential upside target. What's the risk? Well, the risk is either defined underneath the low made prior to your buy trigger, so it could be underneath the recent low at the 218 area, or underneath the low end of the zone, which would be underneath the 216.38 area. Okay, either way, you just have to write up a trading plan and then stick to it. Just try and do the same thing over and over and over again. The way you make money with this work is setup plus trigger equals trade entry, and then you manage it. This was a setup. There has been a trigger. Initial management is placing the stop, let's say underneath the low, and then a continued management would be, if the trade starts to play out in your favor, then you at least get to a break-even stop or better. Okay, so that's what I have in STZ, and we'll see if it starts to play out.